Good evening. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. People often ask me that this stock has reached the intrinsic value or not. And let me tell you, I am fed up from these queries because one thing which I always noticed is that intrinsic value is a very big concept in India. I haven't seen many people, except few people, talking about the intrinsic valuation. Ladies and gentlemen, there are three concepts which we need to learn. Number one is definitely the undervaluation. Number two, overvaluation. And number three, intrinsic valuation. Today, I am going to be giving an example of that before you. Suppose there is a stock X and that X is traded at 30 rupees, assuming. You feel that this X is having a potential to reach till 100 or 120, maybe higher. Then how do you feel it? That's more important. That feel should be quantitative in nature rather than qualitative in nature. But most of the time, I saw that judgments are qualitative than quantitative. Because quantitative is stuff. You need to have the business models in place. You need to have the Excel files in place. You need to understand what is the balance sheet and so on and so forth. Ladies and gentlemen, suppose there is a stock X which is traded at 30 rupees. The first thing which we need to learn is that how strong is the balance sheet of that stock. Whether the balance sheet is a cash-rich balance sheet, whether the balance sheet having zero debt, whether that relevant organization business model is strong, whether the expenses which are incurred by company X, this is okay, not heavy expenses, whether they are entering into the new domains, new business models who are sustainable in nature. Because many a times, many companies announce that they are entering into these business models. But these business models may or might not be sustainable in nature. There are ample of examples I can give, but I am restraining myself to give any example because what people do, people only pluck that example. I have seen in the last 2 to 3 years, there are ample of announcements by few players, and I always tend to differ that from where the funds would come. Who would be funding? Who would be giving them money? That's more important. Ladies and gentlemen, also, we need to learn that when it comes to balance sheet, it is the moral duty of the investor to learn how to study the balance sheet. I know that people feel that this is very difficult. We are not highly educated. We are not trained. We do not know how to handle this. We dependent on the media. We dependent on few different XYZ YouTube channels and so on and so forth. But having said that, rather than having a utmost dependency, you should focus on your I would say your own skill set, your own learnings. So if a stock which is traded at 30 rupees, and if I look at the balance sheet and I feel that balance sheet is very strong, it's a cash rich balance sheet, the order to sales ratio is very high, even though there is a debt, the debt is very, very minimal in nature, I tend to buy this stock. Because to me, this is undervalued. Undervalued from intrinsic value. And suppose I'm finding any stock which is traded at 2,000 rupees, and after looking at the balance sheet, looking at the debt, looking at this, I feel that this stock is highly overvalued. Highly overvalued. This stock should have been around 400 or 500 as per my intrinsic valuation models. I'm not going to be buy this stock. Henceforth, one important thing which I always wish to highlight to my YouTube subscribers is that you should learn three things. Number one, what is overvaluation? Number two, what is undervaluation? And number three, what is intrinsic valuation? The day you learned these three things, 99% you will not commit the mistake. I'm not saying that there is no mistake. Sometimes mistakes happen, but 99% you will not commit the mistake. Because if a stock named X having a strong balance sheet, but it is trading at 30 rupees, which means that this stock is having undervaluation tag as compared to intrinsic value. But suppose a stock whose intrinsic value is 40 rupees and it is traded at 700 rupees and still people are buying this. There are ample of evidences I am holding where a stock who used to trade double digit, rather triple digit, this stock went to double digit. But fantasy, FOMO, fear of missing out. This FOMO, fear of missing out, is pushing people to enter into a triple digit, rather 4-digit stock, even without looking at the balance sheet. And then what you do, you understand that. Investors needs to learn that. We need to learn the company structure. There is a very good thing which is happening now in India, and we really need to appreciate that India is moving towards holding company structures, which technically is known as holdco. Holdco. Holdco is a very, very technical term. You can't, even if I make 7 videos on holdco, I am claiming that I might not be able to touch even the tip of the iceberg, because holdco, which is also known as holding corporation, is one of the finest achievement in the world of corporate law, in the world of corporates. But people do not understand. Henceforth, overvaluation, undervaluation, intrinsic valuation, these are keys. You need to learn that. You can't run away from that. Please take a note of that. This is what I wish to say. This is Rahul Magan from Treasury Consulting. You have my number 9899242978.